Man. Hey, everybody, this is Mack with Veterans Achieve Business Systems. Today we have Daniel Lopez. Daniel and I have become friends, I guess, about a year now. And he specializes in multifamily dwellings and the investment of. He has been working diligently. One of the struggles, and I do a little bit of this, I'm trying to be more educated on the investment possibilities of multifamily dwellings. But he's actually addressing one of the issues that I have. How do you know that a property is the property you should pay attention to and get involved with? Is it the right price? Is the neighborhood a good neighborhood? On and on. I think that you referred to that as the underwriting process, Daniel. Um, I'm interested in hearing about the real estate part and how you got involved in that, and has it been fruitful? Um, More so, what drove you to try to develop something, a tool that is a little bit easier for somebody that may not be as educated because they haven't done 50 or 100 of these deals and been successful on all of them? I want to thank you for taking the time to come out, and I'll keep letting people in, and I'm going to let you take it over now.
Hi, everybody. Nice to see everybody on here. So, my name is Daniel. I am going to be talking about our AI tool as well as a little bit of multifamily real estate. Something that a lot of people don't know about. People are usually familiar with single family homes, and that's usually where most people start when they get into the business. So, where it all started for me, I believe this all really started when I was in my early 20s. I essentially met a friend in martial arts who was a realtor. And at the time, he kind of got me to go to his place, help him, and he hired me as a private contractor. Well, then this later on evolved. I ended up going to school, got my engineering degree, and then as I started to I started talking to my wife, and I'm like, we got to do something. We got to invest in something. We can't just let money sit in savings. So let's invest in real estate. So then from there, I picked up a book by Ken McElroy, who, if you guys don't know who that is, he essentially works with Robert Kiyosaki, and he talks about multifamily real estate and, the metrics that you have to essentially look at before you invest in a property. Because it's kind of like investing in stocks in a sense. Like if you throw your money out there to a stock and you have no idea what the stock, who it's by, how much money it's making, it could tank and it could be a really bad investment. So, anyways, me and my wife were talking and we're like, okay, let's start off with single family, investing in single family homes. My sister was a broker, so I started talking to her. I hit her up and, she started showing me properties and, all the single family units they had. Well, then I I was looking at cap rate because, cap rate, cash on cash, and I'll talk about what these all mean as well in my PowerPoint. That all goes into when you're looking at a property to make sure you can make money on the property. So we were looking at properties, and then I came across um, it was an ad. It was called Multifamily Mindset. And in multifamily mindset, they were talking about multifamilies, investing in apartments, and basically how to do it. And they were going to hold a free class, a free lecture. So, and it was going to be at the Marriott in Golden. So I told my wife, I said, "Hey, let's go to this event." I was like, they might try to sell something, whatever. If they try to sell something, we're gonna act like it's $1 million. We can't buy it. We're just gonna go there. We're gonna check it out and just see what this is all about. Maybe we'll learn something. They always like to drop gold nuggets. So we go to this event, and it's about a two hour class. They're talking about, multifamily investing. The guy starts talking about cap rate, cash on cash, debt service coverage ratio. And of course, I take my wife with me because she's the one that calls out when people are, all the bull crap. I don't want to, but she calls people out on bull crap. She like can tell me whether or not she believes somebody is there to just to sell you, or they're actually trying to deliver value. So we're there for about a couple hours, and I like look at her and I'm like, "What do you think?" And she goes, "Yeah, seems like everything is checking out." So then we sign up for their $2,000, three-day course. So we go to that. We spent 3 days absorbing all this information. And this guy, when I'm telling you, this guy's named Tyler, he is just dumping information on you. Of course, he has this workbook, which is nice because you get to understand, what he's talking about, flip through pages as he's talking about it. And then he offers, of course, the big one, his $40,000 coaching course. Right. And I'm like, oh my gosh, like this sounds really good. I really want to invest, but 40 grand might be a little much for me. But instead of asking, like, instead of saying, I can't do this, like start asking, well, how can I do this? How can I come up with the funds to do this? How can I? That's where it always starts. So I find a way to come up with the funds and eventually invest in this coaching program. So my wife and I, we get into this coaching program, and each person in multifamily has a role. There are four roles that usually come when you're doing multifamily. There's your acquisitions, which is the person who finds the deal. And then you have your capital raiser. And this is the person who goes and he talks to investors, talks about the property that your acquisitions manager has found. And basically, his job is to essentially get people interested in the deal, investors. And usually a lot of it is people who have either invested before or who are accredited investors. So, and then you have your sponsor, and your sponsor is the person who has done deals. They have the liquidity and the net worth to essentially secure a loan. And then you have your asset manager, and the asset manager essentially goes over, he manages the property. So you have an asset manager who manages the property manager. Now, what makes this interesting is multifamily is a little bit different from single family. In single family, when you're trying to secure a loan, it's usually driven by your income, how much you make. But when you invest in a multifamily, the way that the bank looks at it is they say whether or not this property is cash flowing. If this property is cash flowing, they usually have there's something called a debt service coverage ratio. It's a ratio that the banks use in order to say whether or not they're going to give you this loan. And essentially what it is the money that you're putting out, are you making more money coming in than what's going out, than what's invested? And then if it is, then the banks will essentially secure you the loan, which usually has to be done by the sponsor you're working with. Okay, so I'm gonna dive a little bit into my PowerPoint, so before I do that, my wife was she was the acquisition manager. She still is. She's my chief underwriter. Now, the underwriting process, if you're fairly new to this process can take anywhere from 1 day to 2 days. Uh, because you're having to plug in numbers within these Excel sheets. So so we decided one day she was like, hey, she goes, I wish I could just upload my files into AI and have AI, look at the deal for me, run the numbers, and then that way I can essentially glance at it and it could tell me whether or not it's a good property and do it in a matter of minutes rather than taking hours or days. So then this is where I was like, well, there's a couple people who work with AI and Achieve. Let's see, if we can get one of them to help us out with this, to make this possible. So, we found someone in Achieve who was willing to help us create this. And in fact, we're going to do a live demo today where you can see how this tool will work. Now, this tool has saved us time. I mean, we were able to, and let me tell you, when you're analyzing deals, you first have to pick a market, and then in that market, you have to see whether or not there's growth. And then from there, you check your property, make sure the metrics on your property also align. And this is what takes time because you have to get your CoStar reports. You have to get all of this different information, and then you can decide whether or not, hey, is this a good investment property or not? Now, if you're taking 1 to 2 days doing this, I mean, someone else could be moving on that property. And a lot of the times, sponsors are the people that you work with will usually say, hey, it's a first come, first served basis. So if this property is making money, but someone else has, brought the property to my attention, I will help them before I help you with the same property. So that's why we created this AI tool, because we understand that speed is the name of the game in real estate. So without further ado, I'm going to share my PowerPoint. Let me see. Can everybody see my PowerPoint?
There we go.
Okay. Let's see if I can minimize it. Okay. So, of course, this AI tool that we developed is, so I basically came up with the idea. Greg Jamison, who's in Achieve, he's one of the alphas, I believe, has helped me create it. He's the AI developer. And then there's Alden Walker, who's our chief underwriter, who essentially is using it to test whether or not a property is good. So, as I said before, the efficiency of a traditional underwriting, it can take hours of time. And within those hours of you having to do the underwriting process, there's potential to make mistakes. There's potential to get numbers wrong. And let me tell you, if you add an extra zero where there's not supposed to be an extra zero, it can really throw you off. So, of course, we want with our product is speed and accuracy. And that's where AI comes in, because AI, a lot of times what you feed it, as they say, garbage in, garbage out. If you feed it something good, it will give you what you need. And that's what we wanted with our product, is to be able not to necessarily replace an underwriter so much, because the person still has to kind of have an idea of the underwriting process. But this underwriting tool allows you to see the properties with speed. It analyzes it with the correct numbers so that you're able to make a quick decision on whether or not you want to move forward on a property. So our AI solution was the data analysis, metrics and minutes, and seamless integration. So we wanted to essentially have the AI train to look at the metrics that people who invest in real estate look at, which again is cap rate, cash on cash return, and debt service coverage ratio. We wanted to be able to integrate AI because most people or most companies nowadays who are in real estate are integrating AI. AI is becoming something that's just going to be part of our everyday lives. It's not going away. So we might as well use it to our advantage and make it so that way it saves us time and money. The time. So what's nice about our tool is that, beforehand, you would have to look at what they call a rent roll and a T12 or your T12. Essentially, you're looking at, how well the property is doing, who's living there, who's paying rent, who's not. And after looking at all of these pieces, then you can start to get your cap rate, your cash on cash return, and your debt service coverage ratio, which is all broken down into formulas, which I'll be introducing here soon. Now, while you're doing all of this, it's taking time. You're spending hours away from your family. You're spending, time looking at the properties. You're trying to figure out if this property is going to be a good investment, because you don't want to spend millions of dollars or have people invest in your properties, investing millions of dollars of their own capital in hopes that they get a return on investment, only to find out later that the property, didn't do so well, and now everybody's lost money. So that's where we came up with our AI tool. So we at first, when I tried to, we had the, paid for Chat GPT, which is, the open source AI, which is what everybody else is using. But the issue that we found when we were doing the Chat GPT was that a lot of times when we got our, when we had the broker send over the necessary information to analyze the deal, a lot of times the chat GPT wouldn't upload your Excel spreadsheets. Like it had trouble doing it. We were having issues with it. So we couldn't rely on chat GPT as something to use. Otherwise, we would just use that instead. So that's where we came up with the idea to essentially create our own product. So our tools usually it's pretty easily to integrate within the process. Uh, what we'll do is we essentially upload our Excel spreadsheets, our T12s, and we tell the AI what we want, what to look for, and the AI does it, reads it in minutes, and then essentially spits out the information you need. And this is why you can't just blow off underwriting and not knowing what underwriting is. You have to have at least a little bit of an idea because then you can look at the AI information that it has given you and determine whether or not its information is correct or whether, is there something else that you wanted to look at. Uh, Give me a second. So the key metrics, as I said before, is your cap rate, your cash on cash, and your DSCR. Now, for those of you who don't know what cap rate is, it's the property performance with before financing. So essentially how well the property is doing before financing. So if my property is, for every 100, let's say I have a cap rate of, 6%, which is normally what we look for. That means for every $100 that the property is worth, it will generate $6 for every 100. And then you have your cash on cash, which is your investor's performance. So for our investors, we like to do a 9% cash on cash return. So basically, our investors will be getting, it's how hard their cash is working for them. How hard, you want to know when you invest your money in something, you want to know how much money you're going to get back in return and how hard your cash is working. And then you have your DSCR, which is your net operating income minus your annual debt service. And this number is very important. This is something that I don't think a lot of people know about. And essentially, like I was talking about earlier, when the banks are analyzing your property, they are looking on whether or not your property is cash flowing. And that will determine whether or not they give you the loan. So a lot of times most banks they want a minimum DSCR of 1.25. And then that 1.25 is where there's at that point where they will actually give you the loan. For us, we look for a DSCR of 1.4. And this is to basically make sure that we can cover the loan that we get from the banks and not have any troubles in case there's any hiccups within the, investing, like, in case there's any hiccups within, when it comes to investing in these properties. So our
Can
AI
I,
tool, yes, go ahead if you want.
yeah, yeah, I know enough to be dangerous. And, and, and we all worry about investing.
Hmm.
Do we pay that $40,000 or do we use that $40,000 to invest? Do we just do the training or do we get the actually jumping into something? Um, when you're looking at cash flow, you're looking at occupancy rate. If you're at 95%, is the market at $1,000 a unit per month, but you're charging 890. So could
Hmm.
you actually take it up? Uh, are there other fees like storage or parking that you may have extra income, pet fees that are non-refundable? You're basically charging for that cat to live there because you're going to have to deal with what a cat does to an apartment. Does your app encompass all of that?
Well, that right there is not what. So the app essentially what it does is it looks at your metrics and it does look at the occupancy rate and whether or not, what is the percentage of that occupancy. A lot of times the sponsors won't even do a deal with you unless your occupancy and the sponsors are somebody who's essentially vouching for you to say and taking the loan out. And they're the ones who are saying whether or not this property is good. They won't even look at a property unless they can tell you can tell them how old the property is, or they call it the vintage. whether or not the property has like a certain percentage of occupancy. The minimum I've seen people do deals like this is within, if the occupancy rate was at least at 85%. Some people require 90% in order to, say that they want to move forward with the deal. And as far as like, cats and, having those pets and all, and people, having their pets live with them, this is all what we call value add. So a lot of times, and it depends on the type of the investor. For instance, for us, we look for something called a Class C, and this refers to older buildings, usually more than 25 years old. They often require significant maintenance or renovation. So they make them prime candidates for ad strategies. And what I mean by ad strategies is you go there and you look at the property, you say, hey, okay, I see that maybe this place needs new carpet. It hasn't had new carpet in a long time. Maybe there's cat pee or, dog pee on the carpet. Let's tear out this carpet. Let's put in new carpet. Let's do a little bit of a paint job, and then we just created value. So now, the rent was $800. Now we can charge them 1,000. And this is what we creates the value add. So now we force equity to go up in doing this value add. Now there are some people who don't want to invest in something like that. They'd rather invest in something called a Class A property, in which they invest the money in there. They're not looking to sell the property. They're looking to hold on to the property only for passive income. And so, to answer your question, our tool doesn't really say whether or not there's pets living there unless that the pets and all that is in the information we get from the broker. Is there anything you want us to add to this, honey?
So I can say a little bit from here
Go
is
ahead.
that things like pet rent are usually listed on the rent roll and how much they're charging. That's one value add is adding things like pet rent. And yeah, you just kind of, security deposits cover the repairs needed in for, having pets, stuff like that. But those are value add opportunities that you make because the more that you drive up how much the property makes, the higher the value of the property because the property is valued by the bank at how much it brings in, not by your credit or how much or the neighborhood or anything like that. It all comes down to occupancy and how much it's bringing in. So that's what value add is all about. So yeah, and CapEx is one of the things that you raise for beforehand so that you can do the repositioning of the apartments. Okay.
Did that answer your question, Mac?
Yeah, well, I don't know. It answered the question that I posed, but it's putting it into effect, and I don't want to take away from your presentation. I know I'm going to have a lot of questions when you're done doing what you're doing. Um, it- you know, for me, and maybe for a lot of people that are going to be watching this on the different YouTube channels that we post to, is how do we develop a relationship so we can become part of your expertise? And that yeah, there's so many analytics to all of it. Um, and I don't, we'll go more into the app itself when you're ready for that. And
Yes.
we'll probably have to get your associate Greg on sometime and pick his brain on AI. All of us know that AI is becoming very important in most marketplaces, but we may understand how to do the prompts. We don't understand the process itself. And that's one of the problems with AI. It keeps us dumb. And that to the extent that we look for the answer, here's the answer, we write the answer down. And what do we do? What did we learn? Did we actually learn something so we can do more of it on our own? Um, or are we now part of a team that can guide us, so that as we know, tied into the other thousands of members of with the group that we're involved with, Achieve Systems, we don't know what we don't know, but we spend time getting to know each other so that we can pick somebody's brain. I actually everybody is on here, but learning from Arca and Steve on what they do. Sally and with her trauma. Tim, we became friends because he plied me with tequila and we smoked good cigars together. But we've gotten to know each other. How do we get to know Daniel and Autumn
Well, I
to
am in
so
a
that we
team.
now we may not have to be your genius, but we got your genius helping us.
Well, I am in a chief, and I always, my number, if people want to call me or, ask questions, I can leave my contact information is at the end of this PowerPoint. I don't mind people calling me up and asking me questions. A lot of times when you're investing in multifamily, you're right. You do want to develop strategic relationships because most of the time you're in these deals for 3 to 5 years and sometimes even so long as 7 years. So you don't want to be doing deals with people who you don't get along with or who maybe your values don't align with one another because then it makes it difficult later on down the line. And then, as you know, when money starts getting into the picture, it becomes more complicated. Things become more complex.
Well,
So
and I think that's really important, Daniel, is that and I approach all these things from my perspective and who's in the same position that I'm in. Steve and Ark are closer to my age, and that so we've had our lives. We're now trying to continue to have a life. We're doing different things. We want to use the money that we've put aside to have a life, to make a nickel more than we spend. But we would really like to make a dollar more than we spend.
that's right.
How do we,
Exactly.
yeah, how do we, do that tied into investment? Am I going to invest in something and it's am I going to totally blow everything? And that how do we get that security? And I know that you have an answer, but for the people that are listening and looking at why should they look at anything? I mean, we all know the functionality and the purpose of being a homeowner, and that but even being a homeowner can be a pain in the neck. I
That's
just put
right.
a $40,000 roof on my house.
Oh yeah, that's right.
So, those are things that you don't count for, but it would have been $100,000 if the roof actually started leaking. And that, so how, if I'm looking at a multifamily thing, do you take over the property yourself? Do you invest in a property manager that has that expertise? How do
That's
you
right.
bring experts uh, into your function?
Well, normally for myself, and this is me personally, because I get what you're saying too. Like you want to be able to make sure your money is compounding, correct? Because that's the name of the game is like, we first earn our income and then we save our income, but then we want our money to go to work and work for us, right? We don't always want to work for our money all our life. And sometimes we even want to leave generational wealth. We want to leave something for people, for maybe the younger generation to have. And um, I think it all depends on a case by case basis. Like, what are your goals, right? But if I was get into this and I was starting to get into this and I wanted to, essentially find the person who can help me with this, I would first look at my group, right, and see who's already involved. And then from there, like you said, pick their brain. Like right now, like everybody on this call knows that I deal in multifamily. So my brain is here to pick. I also have my wife who's also does multifamily. Her head is here to pick as well. Uh, and the way we invest in these properties, it's not just me and her. We normally do it with a team. So they call it syndication. So our team essentially gets together, we evaluate these properties, and then each of us has a role, something that we specialize in to make sure that this property runs the way it's supposed to. For people who just want to invest, who have don't want nothing to do, like you were saying, like, hey, I invested in this property, I had a roof, there's a leak, now I got to deal with it, right? And that is something that, when you have a team of people, it's not just you dealing with the leak, it's the team dealing with the leak. So now the team is kind of, they're all brainstorming saying, okay, what private contractors can we hire to fix this leak, to make sure this leak isn't happening, and then, and do that in such a way where it's not going to be too expensive. Like you're still gonna come out ahead.
How does somebody know if somebody's an expert? Is there a certification? I mean, we know a realtor has to have a license. We know Tim has to have a license because he sells Medicare and health policies. But do all these investors and all these different moving parts that you've talked about, what qualifications do they have to have other
Well,
than saying, "Hey, I'm an expert, give me your money"?
I'm gonna let my wife answer that question for you, Mac. Go ahead.
Good. Well, I would rather talk with her than you anyway. Uh,
Well, I'm here. So I think I understand what you're talking about in that you're saying, hey, if I was to invest in a single family home, that anytime there's a problem, it is my problem. The money comes out of my pocket, and it's very, very easy for it to become a liability instead of an investment, really. So with multifamily, what's really nice about that is that it's first of all, it's much more stable than single family homes because the single family homes value is determined based on the neighborhood. So if you have a friend or say neighbor who decides to sell their place at a discount, then the value of your home at no fault of your own drops, right? So we don't that's why multifamily is so much safer, is because the value of the building is determined not by the neighborhood, not by what other people are selling for, but by how much this property is bringing in. Now for things like that, like houses or roofs and stuff like that, you of course have insurance, but also what you do is you hire a building manager, and the person who manages the building manager is the asset manager. So with the multifamily syndication, you have LPs, limited partners, and you have GPs, general partners. The general partners are the ones who do the work, really. The limited partners are the ones who are investors. They can be sophisticated or accredited. And they're the ones who just park their money and say, I don't really want to think about it. Just give me, quarterly reports or monthly reports or whatever on how my money is doing. Because what we do is with the syndication, we raise this money and we buy this property with a hold time of 3 to 5 years, as much as 7, but really we like to keep it to 3 to 5 in order to do value add. So it's kind of like fix and flip, but instead of fixing and flipping one property, you're fixing and flipping hundreds, depending on how many doors there are all at once. So the general partners are the ones Daniel was talking about. You have your capital raiser, you have your asset manager who also does underwriting, you have your asset manager. That's what you were talking about, Mac, was the asset manager is the one who manages the property manager. He's the one that makes sure that everything's okay, that if something breaks or if something leaks, that the management company that manages your property is doing a good job finding these reputable contractors to take care of your place. So you don't have to be in state or anything like that. But that's usually the process by which you go for these. You don't typically just say, oh, well, we know a contractor here and we know how much he has. It's actually you hire a management company that has a good track record. That's the best way to make sure everything's good with this property and with the management property is that you look for their track record. And you also ask around in that area for who's a good business building manager. That's probably the most important thing, is to choose a really good building manager to be able to take care of those things. And the building manager is one of your assumed expenses. And of course, this all comes back actually to underwriting, on how you know is that you have to really do a good job of underwriting the company, or the building. Underwriting is, a professional underwriter will actually run you about $76,000 a year if you were to hire a full-time underwriter. So that's why it comes back to our tool, where this one you can underwrite. I underwrote 16 properties in an hour once with this. It was amazing how much time it saved me, because the underwriting is probably the most important part, because you have to see, is this building, does it have potential? Is there value add here? Is the rent below market? Because really what you want to do to really add value to the property immediately is, of course, you raise rents, but you first have to make sure that there's room for a rent bump, and that you do the CapEx, which is jargon for, you need to improve the property in order to justify that rent hike. So the way what that does then is it raises the total amount of money that the building makes per year, which then directly drives up its value. The general rule of thumb with multifamily is for every $1 that you increase that the building is making, it gives you another $10 in value. So that's what we're doing constantly, is raising that value. So once the building is fixed up, once the rents are pulled up to market or just a little bit underneath, once you've given it amenities, things like trash service, which you charge for, things like pet rent that you pay for, all of these things, that drives up how much it's making. Once we get to a point where we have natural appreciation and this forced appreciation where it makes sense, we then go ahead and sell it at the increased value. And the limited partners get 70%, and the general partners get 30% of that. But the whole time, this is making money in the meantime as well. And the LPs are preferred, so they get paid first, and they get paid the annuitized return on investment that we are able to promise is at least 15 to 18% per year.
Okay.
So
does and we have a couple questions. And Tim, go ahead and unmute yourself. What I would say is, if somebody were looking at this, are they looking at putting their money in for the 3 to 5 years that you spoke to at that percentage and getting it all in the end? Can do people get a monthly residual income of part of it, or does it just depend on the deal?
No, actually you do. We usually will do a stabilization period of 1 to 2 quarters to make sure, because everything, needs to be stabilized afterwards, because otherwise income, as changes happen, people don't like changes. So income will tend to dip a little bit. So we usually do 1 to 2 quarters of a stabilization period. And then we start to pay out to our LPs once a quarter after that. And so they get steady passive income. And of course, they are preferred first, and then anything over that first 15 to 18%, depending on the deal, is then split 70-30 between the LPs and the GPs. So they do get steady income, passive income from this. And then when we turn the building and sell it at a profit, that profit is then split 70-30 amongst the LPs and the GPs. So the LPs are paid first, they get 70%. And of course, it's divided up based on how much they invested themselves. And after you add up all the money that has been invested after the deal is done, comes to an annuitized amount of 15 to 18%. So that's what our multifamily investing is all about. And that is why we made this tool that we are pushing for people who are also in multifamily, or anybody who is looking to fix and flip a single family home, or who are just wanting to find out more about real estate, or looking to get into the multifamily market, the underwriting is the most important because it all comes down to the deal, whether or not it's going to be a good one. So what this AI tool does is it will take the property, you put in what's called the rent roll and the T12. The rent roll is, what you were talking about, Mac, and who's paying what, when, where, who's, what all that is. And the T12 is their expenses and everything for the last 12 months. And you take those and you put these into the tool, and it'll tell you immediately what your cap rate is, what your NOI, prospective NOI can be. You can also do the value add, which you were talking about there. So yeah, it's a great way shortcut to make sure that you are doing the most due diligence. That's what I'm looking for, is due diligence. That's another part of making sure that the building will have a good return, is that we always do thorough due diligence. We check the pipes, we check the roof, we make sure it's newer. We check for all the problems ahead of time, and we see if it's worth fixing or negotiating, or if it's a flat out deal killer. For example, one of the deal killers is that we cannot accept a property that is older than 1984 because they would have galvanized steel pipes. And that is just a total mess. I mean, we're talking like 6 figures to fix. So we're not going to be doing that. So these are the things we've run it through these filters. We always make sure that the occupancy of the building is north of 90%. In fact, usually you can't get a loan for them unless they are, but that makes it really stable. So
No,
are there any other questions?
There's so many questions. There's no way we're going to learn everything. I think the big thing that you guys have done today is that you show that you can answer the questions. Tim, you had a question.
I just had a quick question is, are you looking at this locally, like in the local market in Colorado, or is this a national?
We do this nationally, so we're looking for the best markets out there. Basically that will make, turn a profit for our investors. We don't just look at it locally. We can look at it locally, but we're not limited to just looking at it locally.
The honest to God truth is that Colorado is not a good market right now. It is right now falling. We are finally entering our bust cycle. Colorado is always on a very boom bust economy that tends to be a little bit more independent than the rest of the nation. The rest of the nation can be in a boom and we will be in a bust. And right now, our concessions are some of the highest in the nation. What concessions means is that you are having to offer deals and discounts or free rents just to get people into the building to keep your occupancy up, and having to reduce rent, which is the opposite of what we want to do. So since that's where the cycle is right now in Colorado, we are not actively looking in the state of Colorado, but we are looking in other states. We like to look in what's called emerging markets, and people are moving on from Colorado into other places, and places that are actively growing are where we like to look.
Okay. Hey, Mac. So Autumn basically, like when she was talking, she basically answered essentially what our tool does. That's why I skipped most of the PowerPoint. Here's our contact information. You can check out the tool at the website at customerstagingarea.com. And that'll give you the price for our tool, which we'll discuss right afterwards. I'm gonna have Autumn demo the tool because we're kind of almost short on time. And if anybody has any questions, let's just save it until after she's done with the demo. And then that way, if if we happen to go over time, at least people got to see what the tool does.
Yeah, I would put your website and your email and Greg's email in the chat. It doesn't show up real good on a screen shot.
Okay. Let me see. Give me 1 second. See if I can copy this and paste it into the chat.
Yeah, just FYI, I'm not seeing that at all. I see
so,
phone, but I can't see website at all.
You put blue on blue.
Yeah.
whoops. Okay. So give me
Probably
1
should
second.
make those red or white.
Yeah, white.
All right, that's a good note. I'll do that for sure.
That's why we're here, Daniel.
All right, so I'm gonna do a
Catching your
screenshot.
butt.
Yeah, that's right. So I'll definitely do that in red next time. It's good feedback. It's good. It's good to have that feedback. So I'm gonna put it in the chat real quick. So let me see, and I'll even put my email right there as well in the chat in case that blue doesn't show up.
Yeah, you probably want people contacting you more than contacting Greg.
Yeah, for
Greg is
Greg, yeah,
our
for me,
developer.
I can explain to you what the tool does. We can help you with the tool. Greg is the developer. He developed the tool. He designed it. Um, he doesn't
An
have the
extremely
multifamily.
intelligent man.
Yeah, he's intelligent when it comes to AI. So he can basically tell you how the AI tool works. As far as it comes to how it applies to real estate, that's where you call us. So I'm gonna go ahead. As soon as my wife comes back, I think she's disciplining our daughter right now. We have a
I got
four-year-old
a quick
daughter.
question. Can I ask
Yeah,
a quick question before
yeah,
she
go ahead.
comes back? So are you trying to sell this tool or are you looking for investors or
I'm
both?
well, it could be both. I mean,
Okay,
if you want to invest in multifamily, that's great. You can always, hit us up. But if you have for people who have their own real estate company who just want the tool and who want
good.
to basically be able to use the tool and and do their own research, then we have the tool for
Got it.
sale. So
So the next question is, do you have a minimum investment?
we do. Our minimum investment to invest in our real estate deals, what was it like at 50,000?
It's 50,000 to enter, and you must be a sophisticated or accredited investor. We'll take both, but we cannot take man on the street
Yeah, which
investors.
means that if you have never invested, it's something that we can't do, and most people won't do that
Well,
with people who have never
what
invested.
and what you can do to become an accredited investor is go to your broker where you have your investments at. They can give you a letter. It's actually fairly simple, but if you have $50,000 in with a brokerage firm and you need to invest $50,000 here, nobody's going to touch you. If you have $1 million and you want to put 50,000 in, and you get the letter that you actually have some knowledge about investments, your broker can give you that letter of authentication.
Okay, got it.
Okay.
I'm assuming it's not necessarily investments, it's risk management. Yeah, it's not investment, but
Combination.
risk man.
Terminology is depends
I
on who
know.
you're talking to.
Yeah.
Okay.
Okay.
So, hey, Mac, we're gonna go ahead and start the tool so
Okay.
that people can see what it does, and then afterwards, if there's any more questions, we can answer any questions afterwards. So I'm going to turn this over to Autumn because she's the pro at this and she's my chief underwriter.
So, real quick, it seems like there's a lot of questions about AI, which means it's a fairly new thing, and that's totally fine. A lot of misunderstandings. So, what I like to explain about an AI is yeah, it can feel like it can keep you dumb, but no more than Google already does. Because all this is shortcutting Google, really. Is that when you type in a question to Google, it gives you a list of websites and you have to go and dig and find it yourself. What AI does is it takes that search and it does the digging for you, is what that does. I like to think of it as Google that I can argue with, which is nice. um, so what we have here is the real estate analyzer. So I love to flick that little wheel. So here we have T-tail rent roll or the OM, which stands for offering memorandum. Don't ever trust an offering memorandum by itself. It's the propaganda for the thing, and it's going to be biased to say the least. So first things first, I need to open my thing here, and you'll see that I've got my stuff here. Yep. I like to minimize it so I can actually see what I'm doing. There it is. Okay. Yep, there it is. So I'm going to move that down there, bring that back up here. Come on. Come on, you can do it. Here. Okay. So here I have a T12. I'm going to drag and drop over there. And it's uploading it, and it will starts to fill in all of this information. Oh, fail. There. Darn. Come on. Maybe that was the wrong one. Here we are. Let's try Naples rent roll. There we go. Is wrong. Thing here. Nope. Well, it's supposed to be easy, but of course, let me. There we go. There we are. Okay, so try one more time. Let's try the Clearwater Oasis. I'm going to put the offering memorandum in there. Here we are.
It might be because you're sharing at the same
It,
time that
it
you're trying to
could be.
manipulate it.
It's not the taking the documents, probably because we're sharing, but well, it says it's here, but So anyway, you put in your loan terms here. Like you normally for a multifamily deal, you're going to be raising at least 34%. You want a loan term of at least 7 years. I prefer to go for 10. The interest rates right now are around 5.75. I like to do an interest only period of 36 months. These are things that you can actually negotiate with the bank, depending on it. All of these little things here will fill in with this information, and then you can just analyze the deal, and you can write in a question here if you have a more specific question about it, and you just hit this here. So let me try one more time to see if I can get these documents to go in. There. Okay. Let's see, let's try that one. Nope, it's not going in for some reason. It's probably because I'm having
sure
to
that
share it. So
yeah, I've had this happen before when I try to share a form. What I want to make sure is that Daniel, okay, I see it in the chat, Daniel's email, so people can reach out to you directly. We're kind of up at the end of the hour, Autumn,
yeah,
and
yeah, we are. So sorry about that, but here's an idea of it, and then you just put it in there, and it will tell you if it's a good deal, what red flags you should look for. If there's some problems, it can also tell you the safety of the neighborhood, the zoning lines, and it can also compare apples to apples, the apartment rents with any other apartments in the area.
And I will be at the Achieve event too, as well, the Achieve University. So if anybody wants to connect with me there, we can go ahead and show them, the how it works there. Also, I just wanted to say this too, like my new,
uh,
I see
his
that. So
camera's not working.
yeah, it's camera's acting up. I'm sorry, but
Are you going to have copies of that with you at a
I am,
university?
I'm
Okay.
gonna have copies there.
Okay.
So yeah,
Uh,
it should be a good one. So I'm hoping if you guys want to talk to me more about this, the whole multifamily real estate and pick me and my wife's brain, we're open to it. Don't be shy. We're not afraid to, answer questions. You're not going to irritate us. It's a passion of ours. So, we can, as you can see, we can pretty much talk all day about
well,
it.
this isn't meant to be your whole presentation. It's meant to instill confidence that you have the knowledge, as I said earlier,
Yep.
that people should reach out to you. Of course, most of us are tied into Achieve Systems, and that is the parent company, for lack of a better term, to what Veterans Achieve Business Systems is. Um, Moving forward and over the weekend, I would love to talk to you about veterans investing. I know that a veteran, if he lives in a unit and he can buy up to 4 units and stuff like that, but I know there's a lot of other veterans investing opportunities out there in multifamily and how they can get involved. Steve is a veteran. I believe Tim is a veteran. And for the people that are listening, if you have that education, be ready, because I think those are the questions that you're going to get from us. I'm going to cut this off. Steve, Arca, any questions before we leave, guys? Tim, buddy, are we seeing you this week at the Mixer or at
Yeah,
university?
supposedly I'm signed up for the university, so
Oh,
should be
Okay.
there on
all right.
Thursday.
Okay.
Yeah,
New
I'll be at the
hotel.
mixer. I'll be at the mixer.
New hotel. Sally, I'll call
Yeah,
you in
yeah.
a little bit.
Okay,
And
good. And thank you, Daniel. I really appreciated your coming on. Yeah.
yeah.
No worries.
Okay.
Mac, where's the university being held? I thought I saw the Hyatt
It's
in the
the
text thing.
Hyatt Denver Tech Center.
Yep. Okay.
And that I haven't been there before, but I'm going to have to look up the address. I think I saw it in floating around. So I'll get this over to the YouTube gurus shortly, and they'll use it. And Daniel, I know we're going to be talking more.
Yep, exactly. So I'll see you at university. Thank you for having me on. It was a pleasure
Right.
talking about. Sorry, the tool just was not cooperating because
Hey,
of this.
this is
Hey,
a safe space.
yeah, really better now than the next time when you're
You
on with,
know,
1,000 people.
that is the the purpose of this. You'll figure it out, and I'm sure you'll be on the phone with Greg shortly to say,
Oh
"Oh,
yeah,
Greg, you screwed up. It didn't work when I put it up." And
yeah.
you
I
can
know we're gonna
tell him
have some
Max said
conversations.
so.
Yeah, we're gonna have some conversations
All
for
right,
sure. But
everybody. We'll see
Thank
y'all
you.
soon. Thanks for
Thank-
next week, Celeste Bonin, WWE champ. She is now an Achieve member. I was looking at her Instagram post last night. First of all, if you haven't met her and you Google her name, she was considered the most beautiful woman in WWE wrestling. She was a champion in WWE. Uh, she does stuff on building your brand, your appearance, and everything that goes along with that. But on her IG thing, she had last night over 1,200 people that had made comment to the campaign for that we put out for next week. So it should be fun. I love the fact that we have this diverse um, impact. And it's one of the great things about Achieve Systems is we're not all doing the same thing. In that no matter what issues somebody may have, there's probably somebody that's an expert at helping them achieve their goals. Steve and Arca, we got to talk more about what you guys do specifically and how we can present that moving forward. I know you guys are signed up for university also. So I look forward to it. We'll see you all next time.
see
Bye.
you guys later.
Thanks,
Bye.
Matt.